obviously the Game of Thrones reference, but in the context of the conference, what I was talking about was that the rich country OECD investors, including the Swedish pension funds, have had a fantastic few decades of good solid returns year after year, and that period is coming to an end. So winter is coming to the world of asset managers and asset owners, and that's because many of the factors, such as the secular decline in interest rates, such as large amounts of quantitative easing, where central banks bought $15 trillion worth of assets in the past 10 years, where there was a secular decline in corporate tax rates, where China's arrival into the WTO led to the single biggest redistribution away from labor towards capital. Many of those factors are either never going to happen again, and some of them might actually go into reverse. So we, instead of expecting from tracking indices, which many of us do, returns of 8 or 9% every year, we should be expecting 2 or 3%, and that will be the new reality. Well, as of today, if you look at the rough number, there's roughly about $80 trillion worth of OECD long-term investors. Roughly 80% of that money is invested within the OECD economies, and roughly 80% of that tracks the index directly or indirectly. Now, what this means is that these investors are heavily overexposed to a group of rich countries that have very high levels of financial and economic interlinkages, that are facing similar risk factors of demographic decline as the number of workers start to shrink in countries such as Germany, etc., and of stagnating productivity. And I know Sweden is different because you're actually paying down your debt, but if you look at Italy and the United States and the UK, fiscal debt has gone up by about 30% of GDP. So fiscal space is much less today, and of course, because interest rates are so low and quantitative easing is already there, if there is a next crisis, we are in a far more fragile situation. So as of today, 80% of our investments are in countries that have very high levels of interlinkages and are facing very similar risk factors which are rising. And as our grandmother told us, do not put all your eggs in one basket, and that's exactly what we have done. To change that, investors have to, including the Swedish funds, should be looking much more at emerging and developing countries where the number of workers is rising, where productivity is higher, where fiscal and monetary policy is much more orthodox, and where support for globalization remains high. And I think we have fantastic opportunities with the transition towards sustainability. We have some fantastic opportunities with trying to meet the sustainable development goals and what it means for investment in education and healthcare and infrastructure, and that is where we should be looking. Part of the problem of why investors don't act on their own is it's a collective action problem. No one particularly wants to be the first, because of course, let's say one of the Swedish AP funds started making large investments in India, and as long as things are going well, everybody will be clapping. But even if one or two investments went wrong, I can imagine a headline in Svenska Dagbladet saying, AP funds makes irresponsible investment, and nobody wants to take that risk. So what we need is guidance from policymakers. So in the same way that the Paris Accord has sent a benchmark that we will try and keep climate change and global warming to less than 2 degrees, politicians should set an expectation, if not a binding benchmark, that says AP funds need to diversify, need to go where global growth is coming from. You can generate high returns of 10, even 20% in an economy growing at 2 or 3% for 1 or 2 years, but you can't do it for the long term. And if Swedish pensioners expect 7 or 8% from the AP funds, they have to look at emerging markets. No, we have a track record in Sweden of being very adaptable and flexible, being ahead of the curve, and we are ahead of the curve, for example, in talking about sustainability, for example, in adopting ESG guidelines, but we are not as ahead as we think we are. So I think if any country is well placed to tackle this challenge, it's going to be Sweden. And we are at present the very one-eyed in the land of the very blind, and I think it's time to open both our eyes.